Welcome to the Ask Me How I Know podcast, the only podcast in the multifamily niche replicating what takes place outside the walls of a seminar. This is like the lobby, where honest, unscripted conversations take place and transformation happens. We'll talk about practical problem solving in the multifamily niche, as well as overcoming limiting beliefs. Thank you for joining us today, and now for our featured guest. Welcome back to Ask Me How I Know, and today we have such a special guest on our show. Sandhya, you have joined me, and I am so excited to feature you. You have such a cool story, and remember that Ask Me How I Know is not just about stories, but it's about overcoming. But anyway, I just want to say welcome, first of all, to Ask Me How I Know.
Thank you so much for having me on your show. It is such an honor to be here. I'm so excited. Your personality is so vibrant and very excited to have this conversation with you.
You know what? It's just everybody that I meet, it's so exciting to hear people's stories because they're always relatable. Like it's always just like this little iteration, and there's so much growth that can happen for everyone. And sometimes people even like come up and they realize after the fact, like, wow, verbally speaking the story brings a whole new meaning to it. So, yeah. You closed on your first deal last year before all the crazy happened.
Yep.
And that was a whole experience for you, wasn't it?
Yes, it was. It was my first ever multifamily deal. I had always invested passively prior to that. And so getting in on my first deal was just fantastic experience.
Wow. Before we jump into, some of the hurdles that you overcame with, running and your own deal, I want to ask you, how was being a passive investor helpful?
Being a passive investor, to me, as someone with no real estate background, this was the best way to get into multifamily. The things I learned with every deal that I invested in passively were priceless. A lot of the things you learn are the basics, like how do you evaluate a deal? How did they underwrite it? Oh, they're promising me these kind of returns. How do they justify that? Oh, it's because of rent increases and other income. How do you justify that rent increase? Oh, because this market is great. Why is this market great? And they justify that again. But then a few months later, you get to see, did they really do what they said they would do? Are their projections coming out true? Am I getting the returns that they promised me or they said at the beginning of this cycle? Because all of this was happening in the 2018 to 2019 time frame when the market was still great. We're not in a COVID era or anything else, right? So there's no pandemic that is scaring people or making renters not pay. So these were the good times. So for projections to come true, I also figured out, oh, this is their plan. So this is the kind of property they bought. These are the major rehab projects they plan to do. And so by spending this much on an upgrade, they are going to get $100 rent bump, for example. So I learned all the different ways that you can add value to a multifamily property, but just as a spectator rather than being the operator. And I just have this huge now list of what things to look for when I invest passively, because I still invest a lot passively. I want to be only as active as I can to have a balance of work life. So I don't want to be trying to asset manage a dozen properties because I know that would be more than a full-time job. So I still invest a lot passively. And you start seeing the differences between all the different operators. And it doesn't mean an inexperienced operator is doing worse than an experienced operator. And actually, I've had even the opposite come true, because no matter how experienced an operator is, if they're not familiar with a new market where they've invested a property, or if they've not worked as a team together with this other experienced operator, a lot of things do go wrong and they clash, or the projections just don't come true because this was a more rough neighborhood, shall we say, as an example. So I have learned so much from the experience. I would tell anyone who's new to multifamily that passive investing is the best way to go, because you get to ask your sponsor questions. If you invest in a stock in Amazon, it's not like you can just call up Jeff Bezos and ask him, hey, what are you doing next? What's your next move on Amazon, right?
Right.
But you can do that when you invest passively in multifamily, and you actually learn the process. You learn to ask even better questions the next time you're listening to a webinar. And if you ever want to become an active operator, this is the best chance because you've given this person, at least 50K of your hard-earned money. So they're going to answer questions for you. They'll be more willing to talk to you, and you get hands-on lessons. You can even visit the property. I could go on and on. I could write a book about the benefits of passive investing. So
Okay, we all heard it here. The book is coming out next year.
One day in the distant future, because unlike you, I'm not quite as proficient in writing nicely in English. So I'm going to have to first do tiny articles, which I do on LinkedIn, about things to look for in a deal. How do you analyze a deal? What are the key terms to understand and look for, especially if you're not in the real estate business? A lot of these terms are very unfamiliar. So I had to learn all of that too. And the best way is, again, review a webinar someone presented to you as a passive investor and understand all those terms and then start comparing deals.
Yeah, and that's where my husband and I were at as well. I mean, we jumped in as passive investors. We are in single family prior and making that transition. We decided before we start, managing and, operating our own deals, we want to make sure we understand, like, what does it feel like to be a passive investor? I mean, because you're giving up a 50K or larger sum of money to someone based, like you said, hey, here's the webinar, here are the projections, and there's something to being able to relate to that, especially when you're raising money, raising capital for some.
Oh yeah.
Speaking of raising capital, you've had
we had some interesting things happen. So last year it was my first deal, and because it is other people's money, I only wanted to go with other experienced operators. I didn't want to go solo on my first deal. Yes. So I was able to get a couple of guys to partner with me, which was very nice of them to include me. And I was serving for them as boots on the ground. So during the capital raise part of it, I had spoken with several people who had promised large sums of money. And two of them in the last, shall we say, once they filled out the investor questionnaire, promised the sum of money, etc. When it came down to wiring the funds, two of them kind of said, well, I don't think I can quite go to 200K. I'm just going to do the minimum. So, they went down from 200K to 50K. I was like, what?
And you have two of those. That's 300K. How much were you trying to raise?
We had to raise about 2.4 million for this deal. So, it is a significant piece of it.
Right.
And lucky for us, I think this deal was, so attractive. And this was back in 2019. The numbers looked so good and the projections were so great. We actually were oversubscribed in actual money that came, not just in soft commits. So we actually ended up with having more money in the bank than we needed at the time of closing. And we ended up getting like 80% LTV, which was fantastic, which was more than we had planned for. So we were really good as far as being able to close on time without requesting any further extensions. But that was just like, what? We just talked about why this is such a great investment. So what is funny is we sent out the K1 statements recently on this property. And the investors who pledged 200K and then came down to just 50K, they both said, dang, I didn't know you had such a good K1 loss, like 110%. Who does that? I wish I had invested more with you. And I said, keep that in mind. So next time, trust me and invest more with me. And I'll give you only a very, very good deal. Because I'm not one of those people trying to do a deal a month or get to certain numbers. I'm still a predominantly passive investor. But then when I find one or two good deals, I will go and sponsor those. Mm-hmm. And so my balance of work life, again, like I mentioned to you, is about having enough time for my family and other hobbies and not making it all about real estate. So if I only manage one or two properties at a time, I have all the time in the world to take care of them, attend to the property management calls, drive to the properties, and I'm still driving to my properties and still be able to, give the due diligence and attention that the property deserves, especially in times like now.
Oh, wow.
And rent rolls and all of that is so important.
Yeah. Well, I have to circle back to 80% LTV because, I mean, you and I are watching what's taking place right now. And it's just like, crazy. So, I mean, interest rates that's one conversation, but then to factor in, that change in the LTV, and it just seems to be changing every single day. It's like Oh gosh. I mean,
Yeah.
you're set up and you have created such a strong asset,
Mhm,
and to have the capital to,
mhm.
have it overfunded and to have that excess
Yeah.
capital. That's amazing.
Yeah, that's probably one of the best things is also our CapEx projects that we've executed since last year. A lot of them ended up being below what we had budgeted for. So we're in a really good position as far as cash flow for the next year. If all my renters, if I went down to like 50% of occupancy and that's all the rent I could collect, I would still be okay for a year. So that's a really strong position to be in. So I don't have to worry about requesting forbearance from the agency and things of that nature. So,
Wow.
asset management during these times is, I think it's a very important piece. And you're going to see this year the difference between the ones who are focused and know what they're doing in asset management versus the ones who tend to be more hands off and leave it to the property management company. And you're gonna see the difference this year, and you're gonna see hopefully some good deals coming up in the fall.
Yeah, and it's so I always find I'm thinking about the deals that are going to be becoming available, and
Mhm.
it's so bittersweet. The community is
Yeah.
so small, so it's kind of hard to see some people fall, but that we all grow.
Mhm.
That's an opportunity for growth for everybody in their
Yeah.
own way.
I'm guessing they probably still made some money from the deal. It's not like they're losing money, but
Mhm.
in this environment to asset manage closely and do it hands on, I don't think a lot of people want to do it. They feel like once they won the deal, they turn it over to property management and it's all done. And no, you have to closely watch your asset and you have to really know your renters. Like if I look at my list of renters, I actually know some of them where they work and things to that detail. And your leasing manager has to have a very strong relationship with those renters. So they're already having the conversations about, your ability to pay your rent and to not spend your stimulus check on buying a big screen TV. And so go buy, pay your rent first and take care of your bills before you go and spend that money. Those kind of conversations and reminders and working out payment plans. Like one of the things we're doing is we're offering an incentive to our renters who pay their rent on time. So May's rent, if you pay it by May 1st, you get a gift card to a local grocery store. So we're not reducing their rent because we feel like we have a contract, they are obligated to pay full rent. But here, we're giving you an incentive, we're giving you a reward. So instead of waiting another 3, 4 days, pay this rent first and then worry about others. Because in the next 2 weeks, people have just received stimulus checks, as you know. And yeah, TVs and other luxury items, as I call it, are going out the window. So
It's gonna
people need to really remember to pay their bills first. So,
Oh, boy, they
mhm,
really
mhm,
do.
yeah.
And you're thinking about there's so many different ways that people are going about navigating the how do I get my tenants to pay rent? But
Mhm,
last night I was on one of the virtual calls with the multifamily women's group, and it was really interesting to hear some of the different strategies people are using
mhm,
to incentivize people to make their rents. But they're looking at May and they're saying, April actually wasn't a rough month. We're
mhm.
wondering how May is going to turn out.
Right.
It will
Yeah,
be.
and that brings me to deals too. Like, when deals come up in the fall, you really want to look closely at their T3 collections and T12 and say, okay, what is this trend I'm watching as I underwrite this deal? What is my net operating income? How are my expenses being managed? That's a huge one for asset management. Look at in detail at every expense and cut that down. So your legal fees will probably be down because you're not doing evictions because you can't evict a tenant for the next 3, 4 months, especially if you have an agency loan. Like for us, we can't evict anyone till the end of August, but they're still obligated to pay the rent. So my legal fees I expect to be down. Maintenance costs, I don't think we're doing any major capex projects in the next 3, 4 months. We're not doing full upgrades on units. We're renting them as is because we don't think we're going to get the rent bumps. So that's another important thing for asset management. And really to continue to shop your comps, what kind of concessions are your comps offering now to get new tenants, right? And what about the renewals coming up in the next 60 days to 90 days? What are you doing to retain those tenants? Because even if you can get them leased, it costs you money to turn a unit. So why
Yep.
bother? Let them
Yep.
stay put. It's going to cost them to move. Remind them of that as well. and try to work out a plan. And so when we have these renewals coming up, and we're not bumping up the rents as much as we would like, we are doing much shorter term rentals. We're going month to month in some cases, or 3 months in some cases, because then again, you get the opportunity to increase the rent when we're over this cloud of this pandemic, right? Before the second wave hits, as people say.
Right.
That's an opportunity because this is your peak leasing season. So you don't want to renew it for a whole year at the current rental rate if they're due for a rent bump,
Right.
things like
I
that.
I love how meticulous, like you think in such a meticulous way, and I really admire that. It's like the inside, you just know this business so
Mhm.
well, and it just flows right from you. Um,
Yeah.
can I
Go
ask
ahead.
you about other people's money?
Yeah.
OPM. OPM.
Yes.
What is that? What was that like for you taking other? You know what? I'm sorry. Let me retract that because we are never taking money. We're investing money. We're helping people grow their
Mhm.
investments. So, when you were, going out and you're asking people and saying, "Hey, I have this great opportunity," what was that like, and what mental or emotional obstacles did you have to overcome?
I think just a basic fear because I had never taken other people's money in this large a scale. I mean, I'd asked for a $25 donation to a charity and they knew what that was in for, but to ask for, $50,000 or more to invest in something that me and two other partners would be running or me and one other partner would be handling, is a pretty scary feeling because I am saying that I could even beat the S&P 500 in giving them better returns than the stock market. And it's like, wow, I built my wealth through the stock market. And here I am saying I can do a better job than that for the average returns, especially because when people have money in their retirement accounts, at least as far as most of the people I've talked to, they don't pay any attention to that. Once it's there, it's there every month from your paycheck, a certain amount goes into it, but
Yeah.
no one actively manages it and tries to time the market and do all of those things. And when they do, they usually get stressed because they say I saw their stock portfolio fall from January 1st of this year till today. And here I am saying, oh, invest in just this one property, trust me and maybe another partner or two, and I'm going to give you a better return. That was a very scary thought because I know how much it takes to earn that money. And for them to trust me with it was a pretty scary feeling. So the way I overcame that is I studied my deal even more. I tried to be the worst critic I could be on this deal. I tried to really know my streets and the surrounding apartments and the rent comps, for example, the market growth. I tried to see the Chamber of Commerce, what kind of growth they're having in that city, what is the diversity of jobs they have. So I tried to be even more thorough in my analysis. And so when I came back and tried to ask myself all these questions, I was like, why is this a better risk adjusted return compared to the stock market? Well, it's a hard asset. People always need a place to live. So, all of those questions, I found myself getting more and more confident that, yeah, this is actually a better deal. And in fact, after I talked myself a little more into it, I was like, I need to put more money into this deal than
Right.
I originally thought. I was like, this is really a good deal. This is a strong, solid market. And this is like a class C, B property, but in a more class B, A kind of location, lower crime rates, and all of that. So once I was able to convince myself of that, I was able to look. I first went with a friend who I knew for years, who trusted me, who knows where I live. She's down the street from me. And I pitched it to her and I said, tell me, ask me all the bad questions, all the worst case scenarios, and let's see how I can do it. And so that gave me the confidence. Then we did the webinar, to the whole investor base and stuff. And I think first you have to be really, really convinced yourself. Because in a lot of times we are our own worst critic. So if
Yes.
you are convinced that this is a better deal than the stock market, and you can look in the eye of someone and say that, and someone you care about, someone with whom you want to have a long-term relationship and not break that because of this one deal, right? I think that's the way, at least for me as a first-time capital raiser, to overcome that.
That's really powerful. I mean, because you're taking all the data, all the information, and I love that you took it to a friend, someone that you were comfortable with, and said, "Come on, bring it on,
Yeah,
bring your best
basically.
my way." Powerful.
and she invested with us, and she's so happy. She's like, my husband and I are so happy that a portion of our my investment money is with you instead of in the stock market. Because look what happened to our stock market portfolio, because it's tied up in her husband's retirement fund, and because he's with the same employer, she's not able to withdraw that. So she's like, yeah, we see that money and we see what happens to it, and here you are, you've already given us, couple of payments already, and we understand, and our next payment isn't due to them till June. So who knows, right? If our May collections are good, we might do that in June. So,
Right.
so she's really happy with it. So I think I have someone who'll probably invest with me again. And that's ultimately what we're after, right? We want to build those relationships for the
That's
long
right.
term.
Well, and it doesn't take having a ton of investors that passive
Mhm.
investors that you're working with, because once you perform, I mean,
Yeah.
you only have so many spaces available.
Yeah. Yeah.
Like I can't, I mean, you can be only so oversubscribed to things. So,
Yeah.
wow.
You can convince 20 people to invest 100K each with you, you're at 2 million. That's basically what it takes. So even if they previously invested 50 with you, tell them, look how well I did for you. Why don't you double it? You know,
yep.
it's like going back to an existing customer to get more is easier than convincing a newbie who doesn't have a history with you.
Absolutely. You know,
Mhm.
he's not everybody's favorite right now, but what you were saying goes so, it's like, I read Grant Cardone's book, Sell or Be Sold, a few months
Yeah.
ago. And
Hmm.
he talks about that concept of, if you're not sold out, I was going to
There
grab
you
my,
go, Grant.
see, I'm like, I can't quite reach my copy. It's right behind me. But yes, I mean, that's
Mhm.
exactly, so you know it. You read it. It's like,
Yeah.
if you're not sold out on whatever,
Mhm.
then don't expect anyone else to believe in you or to want to
Mhm.
be part of it. And
Mhm.
your past clients are your very best people to go to first.
Yep.
Yeah.
And you are here to serve them, and that's your first priority. No matter how badly you feel for a tenant, you want to work out a payment plan with them. You don't want to tell them, okay, you can just skip rent for this month.
Right.
No, you pay what you can, and we'll take the balance and we'll apply it to the remaining term of your lease over, the next few months whenever your lease ends. We don't want to say, you get to skip rent, because the word's going to get around. The tenants know each other well. These are apartments right next to each other. And so if nobody pays rent, you can't afford to pay your obligations, such as a mortgage. And, a portion of our apartments in one of them is actually all bills paid. So I really care about, the total bills. So they're not responsible for the utility bills. It's still me. So I have mortgage, I have utility bills. I still have to maintain the place, etc. Right, and pay salaries to our maintenance person and leasing managers. So you really want to be kind to your tenants and reasonable, but at the same time, you have to be firm. So you need a leasing manager who's got that balance, who's got the relationship, but says, okay, you signed a contract to pay your rent, so please pay it.
Yes. Yes. Wow. Well, and finding the right, how did you go about finding the right property management fit?
So property management can make or break your deal. So one of the most important things is to know what experience they have in that market. So are they familiar with the city? Do they have other properties they manage nearby? So they really know that market. And the second thing is, can they handle this type and class of property? It doesn't matter if they've managed thousands of properties. Can they run a class C versus a class A? It's a very different clientele. It's a very different dynamic. So can they run that kind of a property? So we want that experience in the location and with that type of apartment. Those are the two biggest things I would look for. And of course, you want to have your KPIs, whatever your key performance indices are, and you want to be able to work with them to deliver the numbers that you want. So, for example, if you want to know what are my weekly move ins and move outs, which of the units have been turned and prepared, so which have been leased and ready for occupancy, leased but not ready for occupancy, vacant but ready, vacant but not ready. Those kind of, what are your statistics that you want on a weekly basis to look at in your apartments? And of course, all your collections, right? Are checks getting deposited in a timely manner so that when you look at the numbers every week, they're real numbers? Because there was one time when we felt like we should have had a much bigger balance, and it was showing about half as much in the bank account. And we were like, what is going on? And it turned out that the banks had reduced hours because of this new pandemic we're in the middle of. And so she couldn't get to depositing the checks on time. So on a Friday, when she got all those checks, which was payday for a lot of our customers, it was not until Monday or Tuesday that she was able to get those deposited. So we were just like, what's going on? Why is our collection so low, kind of scenario? So I had to actually text her and ask her what's going on. So, it's all good. I just didn't get time to go deposit it in the bank. So when you work with your property manager, you want to kind of be on the same page in terms of what is the most important information you want to receive and how you want to receive it. Because although they're managing the property for you, you are the owner. So they are here doing a service for you. You have hired them, and you can certainly let them go if they're not doing what you want them to do. So just keep that in mind that you're ultimately responsible for your passive investors. So a property management company, in all good faith, you may hire them. But what if there's a change of management or the company gets sold or you get a new leasing manager who doesn't work? Well, then you may have to let that new leasing manager go. So we were very specific about the kind of personality we wanted. We wanted someone who is very open and easygoing and approachable to a single mom with two kids who wants to move in here, because we wanted to give them the impression that this is a very safe place. This is your home. We wanted this to be a very safe place for you. So our leasing manager, very easy and approachable, and you can talk to her anytime. So we kind of lean towards those kind of characteristics in specifying to our management company, when you hire someone for this role, this is what we're looking for. And then similarly, our properties in Texas, and in the summer, oh, those air conditioners usually need some help. So we wanted someone who's HVAC certified. So that was important for us for a maintenance person. Even though the salary might be a little bit higher, that was something we wanted so that they can handle all those AC issues. Because every AC call is going to cost you so much money in Texas.
Oh,
so
right.
just little details like that about your property management company. Again, you need to know your location really well and have somebody with experience there in that asset class.
Well, and I like something else that you said. You sent a text message. And
Mhm.
so not, I mean, some property management companies aren't even going to operate in that way, but for you to
Mhm.
be on this level where I know I'm going to send a text message, I'm going to figure this out. That's also another characteristic of probably how you were shopping around as well.
Mhm. It's your relationship, right? So
Yep.
we've known this company now since last August, or actually, they came with us even on property before we closed on the property. So they were part of our due diligence and all of that. So your relationship with the company and how you do, we've been having weekly property management calls. So that's, 3, 4 calls a month easy over the past year. So we've definitely cultivated that relationship with the director as well as the local on-site manager. And that really helps when you need something urgently. And I rarely text them, but when something like this happens, it's like, I need to know because I can't sleep tonight if the collections look like they're only half of what it's supposed to be. So
Oh my
it was
gosh.
such an easy thing. And then I texted my partners and we were done. We're like, okay, good night, kind of
And
thing. So,
so often these things are so
mhm,
simple. And
mhm,
that quick text
mhm,
message, and she has a response back because she knows what's going on, and
mhm,
bam, and everybody's sleeping well at night. Um,
mhm.
that's somebody that you're going to want to hire for to manage every other asset you acquire.
Yeah, we're really happy with this property management company. But then usually when I underwrite deals, I do get bids from property management companies that are local to that area. And so one of the properties, when I was underwriting it a few months ago, this company had no experience there. So I actually went with another local company as well to give me an estimate. And so the local company ended up having much better numbers. And they operated a property a mile down less than a mile from this property location. So it's not always loyalty as much as also who's familiar with business in that locale. That's
Yes.
very important.
Yes. Wow. Well, we are coming to the end of our time, and I have really enjoyed this. I'm wondering if you have any nuggets about mindset or about overcoming people's objections when you're raising capital, or if you have any other nuggets that you would like to pass along to our listeners.
I think one of the most important things about mindset is, have you convinced yourself that this is a good deal? And what place is this other person in? So you really have to get to know your passive investor and what pain are you solving for them, right? Are they in a position? Do you really know their financial position well enough to know if they can afford this $50,000 or higher investment in your property, right? Are they wealthy? Have they filled out a questionnaire? Do you know their level of sophistication in understanding investment risks, right? So if you've bothered to get to know the person pretty well, then you really know whether or not they can take this risk, because it is a risk. Every investment is a risk. And I'd like to say that, if you've done your homework on a multifamily property, it's less risk for them than the stock market. So if you get to know your passive investor and you're solving a problem or relieving them of some pain, which is, don't get anxious watching the fluctuation of the stock market every day. Get your retirement funds out of there, put them in an IRA or a 401k, solo 401k, invest with me, and you don't have to worry. You'll get monthly reports. You can call me anytime you have a question, and you'll be getting this cash flow at least on a quarterly basis, except during pandemic times when we might hold on to the cash. But here's the status of the property, and guess what? If you're a local, I only buy properties that are local to me that I can drive to. Let's go for a drive. Let's go check it out. You give them that confidence and you tell them a hard asset like that, nothing's going to happen. And if there is a tornado that strikes it, we have insurance to cover it. Hopefully our tenants stay safe, right? That's what you want to tell them. So again, you're about mindset. It's about convincing yourself first, and then you can go pitch it to anyone else. If you've convinced yourself and being your worst critic, you can go sell it to anyone else. And another thing real quick I wanted to tell you is several decades ago when I wanted to come to the US, I grew up in India. My parents' monthly salary was $75 a month. That was plenty for us to lead a nice middle-class life. So we were by no means poor in India. But $75 a month wasn't going to help me pay for $20,000 a year in college here, right? Even if my parents gave me their life savings, that wasn't going to be enough. So again, it's a matter of finding a way. If one way doesn't get you to where you want to go, you have to look at other paths, right? And so for me, the other path was I need to get a scholarship. There's no other way I can afford college in the US if I don't get a scholarship. So as a teenager, while I had plenty of other interesting things on my mind, I decided that I had to study and make a really good competitive test score to get this scholarship, which is how I came here to Dallas years ago, decades ago.
Wow.
So I just want to say that when something seems unreachable, unattainable, it might mean because you're only looking at it one way, and you may have to look at it in multiple different ways. So for example, if you've always wanted to fly first class in an airline, the easiest way to do it is friend an airline employee, right? And so maybe you can travel. It might be on standby, but you could travel first class for a fraction of the cost of a real first class ticket. Or you earn enough miles to do upgrades. So there is always a way. You just have to be willing to look at many different ways to get there, right? Instead of just the one traditional path that some other friend might have taken.
You are so inspirational. I'm not kidding you, right? Because there are so many people, right? And right now, this is that moment in history with the pandemic and everything. It's where if you're not willing to pivot and to look at things another way, and then to just keep doing that until you figure it out, it's the game's going to be over. But I love that. I mean, you have a lifetime clearly of pivoting until you find it.
Yeah, and I think women adapt to any situation even more easily. And I don't mean to generalize, but I've seen that because once we get married and we have children, we're always adapting to fulfill the needs of our spouse, our children in general. So I think that we adapt even more easily when our work environment changes. Like I'm in a little attic right now doing this podcast, right? And it's perfectly fine. I don't need a fancy office to do my podcast or interviews, right? So it's just things like that. If you're willing to adapt and make it work, you'll be surprised how far you can go with things.
I love it. Well, I thank you so much for joining me on Ask Me How I Know. This has been just an absolute treasure of time. You have so much wisdom and insight across the board. So I will leave places, I'll leave links as always down in the show notes so that people can follow you. And obviously, if you're a passive investor and you are looking for someone to invest with, you really need to follow all the links. Look at what Sandhya might have coming up so that you can get connected. Obviously, she knows her things. She knows her business inside and out, and she knows how to make, structure assets to perform. I am just,
Thank
I'm
you.
so impressed with you on so many levels.
Awesome. So can I mention my website real quick?
Yes, please do, and I'll leave a link. I'll leave a link as well. But please feel free, mention anything you would like to mention.
It's multifamily for the number 4YOU.com. That's it. Multifamily 4YOU.com. Multifamily for you. That's my website. And if you provide your email address, I can give you a passive investors checklist. How do you vet a sponsor or a sponsorship team? What are things to look for in a deal before you invest your hard-earned money? Things of that nature. So I welcome you to visit my website and learn more about me and about passive investing.
All right. Well, listeners, make sure that you go and check out Multifamily for You. And until next time, I know that our paths cross all the time, and I love that. And just so some people know, like, I want you to know, I appreciate you are such a encourager, and you've been really helping to keep people's mindset in the right place just with some of the posts that you do out on social media, and you're offering so much value with your knowledge as well, like you were mentioning on LinkedIn and everything. So thank you.
Yeah, thank you for the opportunity. It's such an honor to be here. I really appreciate what you're doing. You are so upbeat and positive. I look forward to listening to your episodes.
Fantastic. All right. Until next time, everybody, we're just one decision away from the freedom that you're looking for in life. So as you are, making your choices, just double check that choice and make sure that's the decision, because they stack on top of each other, and every decision will lead you to the life of your dreams if you let it.
Thanks so much for joining me for another episode of Ask Me How I Know. My guests are the most humble successes, so be sure to show them your appreciation by rating this episode 5 stars, which sounds silly, but let's be real. Ratings, likes, and shares, they take no time at all, but make all the difference in the world, if only to boost morale. Also, since I don't spend time on the how and why they got into investing, be sure to check out the show notes to get to know more about today's guests, including other podcasts they've been on that has a more traditional format that will give other details about their investment journey. It'll also tell you things like the most influential person in their life and what they're reading right now, as well as how to connect with them. And please subscribe and rate Ask Me How I Know so it reaches other listeners like you. Until next time, go find your freedom.